Hi, everybody. I'm Rob Bloomstone. I'm with TANGO, and I'm glad that you're able to join us today for our educational series. Roland Schuster wasn't able to make it today, so I'm kind of doing the stand-in introduction to TANGO. Most of you actually know a bit about TANGO, but we do have some new people, new faces joining in. So I'm just going to give a very brief overview. And I just need to let this person in. But to kick off, so we're happy to have Amber Tucker from FML, a partner of TANGO, presenting to us today on planning for a successful audit, expectations, and efficiencies. But as I quickly mentioned, we have a couple new faces, so I'm going to just go through a couple slides about TANGO. So Amber, if you can just flip it to the next slide, that'd be great. Perfect. There we go. So as most of you know, TANGO's mission is to help nonprofits thrive. We help our members create cost savings through education and preferred services that our partners provide to help your business needs. We just actually reached a milestone of over 1,500 nonprofit organizations as members. And collectively, we all represent about 160,000 people that work in the nonprofit sector. We also have 32 socially conscious business partners on our partner platform, which I will speak about in just a bit. Next slide. TANGO's focus is in 3 areas. So first off, we have professional development, like our webinar today, where we provide complimentary education hosted by our partners. Second, we have preferred services, and all of our partners like FML have created what we call a value proposition, where they have exclusive offerings for our members, which you can take advantage of. If you go to our website, there's a partner page there, and you can see all the offerings that our partners have provided to our members, or I should say provide to our members. And lastly, we have goodwill and mission support. So first and foremost, we have Donation Depot, where we donate office items like furniture, printers, computers to our members for their business services. So if you're in need of any office items, you can go to the TANGO website and see what's on the Donation Depot webpage. Second, we have our TANGO Foundation Rising Star Scholarship. So these funds actually support the continuing professional development of rising stars in your organization. This past May, we actually gave out 4 scholarships at our Celebrate Nonprofits Night with the Hartford Yargoats. And each scholarship was actually $7,500 for each of our winners. We had 4. So if you know anyone in your organization that you'd like to nominate for 2023, we're actually accepting nomination forms. And you can once again go on our website to the TANGO Foundation page. And third, we've actually launched our DEI, Diversity, Equity, and Inclusion program, and your organization can take advantage of that. There's a couple different programs that we have to offer. And all the information that I just mentioned is actually on our website in greater detail to, save a little time for the webinar here. So feel free to just browse through the TANGO website, and all the information is there. Next slide, please. There we go. So membership to TANGO, as you all know, and some of you might not, is complimentary to all nonprofit organizations. And that's because of our socially conscious business partners like FML, who pay to be on our business services platform. So as you can see on this slide, we have an array of different business services that our partners provide that can provide to your organization. So if you're looking for specific services, take advantage of the offerings that they have. And I can honestly say that, our partners truly care about the nonprofit sector. They are heavily vetted to be on the TANGO partner platform. So, check out their value propositions when you have a chance, which are on the partners page. Next slide. For those of you who aren't aware, so the Schuster Group is the founding partner of TANGO, and they were recently required, as of the past, say, year and a half, by NFP, which is one of the largest employee benefits insurance services firms. So NFP, they offer services ranging from employee benefits to wealth management, and we're glad to have them under our umbrella. And lastly, next slide, we are finally back in person for our Building Bridges annual conference, which is going to take place on November 2nd at the AquaTurf here in Connecticut. And it's a great event for those of you who haven't been. It's complimentary, of course, as all of our events are. And it's a full day, well, not a full day, but it's almost a full day of education and networking with other nonprofit leaders. There's a bit of fun involved. We actually do a raffle, breakfast and lunch are included. So, once again, sign up today, have your staff sign up. It's a great day, and all the information about Building Bridges is on our website. At www.tangoalliance.org. So hopefully we'll see you there, which it's taking place once again, November the 2nd. And without further ado, I'd like to introduce Amber Tucker from FML.
Thank you, Rob. Is the agenda available for the conference now?
So actually we will have the agenda out actually tomorrow with our guest speakers, and we have a keynote, Morgan Tuck from UConn Huskies basketball team. She's also a 4-time Olympian. But all the session descriptions will be out either tomorrow or on Monday.
Excellent. Yeah. Very excited to see that.
Absolutely.
Okay, so thank you all for joining me today. I'm going to be talking for I have about 30 minutes of information. So I'm really hoping that I can make this an interactive session. So we have a pretty small group today. I think there's probably about, I guess, about 20 of you. So don't be shy to just speak up, ask a question, make a comment. If I say something that might trigger you of, oh, I do this, but a little bit different way, feel free to share it with the group. One of my favorite things about nonprofits is how cohesive you work as an industry. You're not shy to help out each other. So let's use this webinar to kind of continue that momentum going forward. I'll share some information and I hope you do the same. So what we'll be talking about, I wanted to start first, just reminding, because there's a large range of types of nonprofits listening today. Within the 20 of you, some of you already may be getting an audit, and others are contemplating whether they should get an audit. So I just wanted to kind of go over the basics of why an organization may be having an audit. What does the audit opinion mean? And then we'll go over how to prepare for your financial statement audit, just at a high level, some suggestions that maybe make the process smoother for you and more efficient. The key word of the day is really going to be communication. If things aren't going smoothly, it's usually because there's a communication gap, right? Either your auditor's not understanding your words you're saying, or you're not understanding their words they're saying. The message sent is not the message received. So I'll be giving you some clues and some hints on how you can maybe help fill that gap to make your life easier while you're going through that financial statement audit. And then details that should be discussed with your auditor as well. The more proactive you can be, the smoother the process will be as well. And if there's other items you'd like to talk about related to the audit, please let me know. Okay, I do have the chat open, so if you would prefer not to just speak out, you can always just put a question in the chat as well. All right, so why is your organization having a financial statement audit? In some cases, you are not required to have an audit, but your board or your bylaws are dictating you to have an audit. So there's always that option of, I'm just having an audit because that's what we feel is prudent to do, and the board of directors wants to make sure that everything's in line financially. All right, so there's always that option of completely optional, no one's forcing us to do it. But there are some cases where you're forced to have an audit. If you're registered with Department of Consumer Protection, and you're registered as a public charity. If you are soliciting funds from Connecticut as an individual or businesses, and you receive more than $50,000 of contributions, you're required to register with Department of Consumer Protection. And then, and that's an annual renewal. And then if you have gross receipts greater than 500,000, you're required to have an audit. The other requirements may be if you're getting state funding or federal funding. If you're receiving state funding and your expenditures are over 300,000, you're required to have an audit along with a state single audit. If your federal expenditures are greater than 750,000, then you're required to have an audit with a federal single audit. If you've had regular financial statements audits and you're starting to get to that threshold of state or federal needing that audit, speak out to an auditor, to your CPA in advance, because the documentation and the compliance with those audits is elevated from a typical regular financial statement audit. So you want to be as prepared as you can for when that day happens. And just a quick reminder too, that even if you're getting state dollars, if it comes from the federal initially, then it goes onto your federal total. So for instance, if you're getting ARPA funding or COVID relief funding, most likely, not all the time, most likely, it will be federal dollars, even though you're getting it from a state department, because that state department received it from the federals and they're just passing it to you. Okay. And then another common requirement is if you have a bank debt, not so much mortgages, but if maybe a line of credit or an equipment loan, sometimes they require financial statements, as well as some grantors and some foundations are requesting financial statements as well. Okay, so you're getting the audit. What does the audit actually mean, right? So there's some misconceptions about what an audit actually does. The intent of an audit is not to find fraud. It happens to be a piece of it, but it's very difficult to find fraud in an audit. So that's probably the biggest misnomer and misconception out in the business industry. The audit purpose is to make sure that in material aspects, the audit is reported in accordance with GAAP, which is the generally accepted accounting principles. Okay, so when you get an audit, or if you've had one in the past, the opinion actually has changed this year. It rearranged the words. The opinion paragraph that used to be last is actually now first. So this first paragraph here is what section that you would see. And it's just telling the reader right off the bat, the opinion is a cleanup opinion, it presents fairly in all material specs. But then it also then explains what the basis of the opinion is, right? So the audit is in accordance with our auditing standards, generally accepted auditing standards, and that we are required to be independent, and that the audit evidence we obtain is sufficient and appropriate to provide a basis for the opinion. So that does not mean we're looking at every single transaction. We are looking at those that are material. A high dollar amount would be your materiality. It's set by looking at your total picture and setting a threshold. So amounts over a certain threshold that are set by the auditor are correct. And then they do a sample of testing as well. So no one's looking at anything 100%. The opinion then goes into what's my responsibility as an auditor, and also goes into the responsibility of what management's responsibility is. And so it just really reiterates, right, that the financial statements as a whole are free from material misstatement, whether due to fraud or error. The report adds that the risk of not detecting a material misstatement resulting from fraud is higher than one resulting from an error. Because if someone is trying to deceive us, right, if I ask for a sample of invoices and they give me the invoices, if one of those are fraudulent, it would be very difficult for an auditor to tell that. So that's why that language is in there. We are to exercise professional judgment. So if the fraudulent invoice that they gave us looks completely fake, right? We should have some professional judgment. If it looks legitimate, then again, we're using our professional judgment. We're auditing based on risks, and we'll go over a little bit more on what that means, but we look at your financial statements or your trial balance and we set what are the risks that I need to focus in on my audit. Revenue recognition is always a risk. It's an audit mandate that revenue recognition is a risk. So they're always going to look at how are you recognizing your revenue? How are you recognizing your contributions, your membership fees, whatever your revenue sources might be. We're required to understand your internal controls. We're only required to test those controls if we're doing a state or federal single audit. If you're doing just a regular financial statement audit, they're not required to test those internal controls. They may choose to, but they're not required to. And evaluate the appropriateness of your accounting policies. All right, so that's the extent of the opinion that goes through kind of what we're trying to convey during the audit. So I like the wording changes within the audit, but it just makes it a little bit clearer for the reader if they haven't actually performed an audit themselves. So what I believe you're really here to listen for is, how do I be prepared to make my audit the most efficient, right? Because I think from time to time, audits are late. And it's always a question of, why was it late? Is it the auditor ignoring me? Or is it the I wasn't prepared as I needed to be, or I couldn't be as responsive? And oftentimes, maybe it's a little bit of both. Maybe there's no blame one way or the other. It's just the way that it happened. But through communication and proper planning, I think that all audits can be on time, right? And if you're fully prepared and you're being responsive, there's really no reason for your audit not to come in on time. So that's where the communication needs to happen. So planning and doing work in advance of the actual audit is when audits become the most successful as far as efficiency on your time and their time. You should receive in advance a request list from your auditor asking for specific items. Now I always like to tell everyone, remember, this is just my initial request, because from this request, I'm going to look at documents and make further requests. So it's a constant back and forth. There's no just one list in the beginning and you're done. Unfortunately, audits have lots of back and forths and inquiries as they go. But if you're prepared for your audit, you really just shouldn't even need this initial list. It would be a good check for you to make sure you have everything that they're requesting. But if you're prepared and you're doing your monthly closes or even just your year-end close, you should have everything they need. All right, so let's go over what that means. I'll just pause for a second. Any questions or comments before I kind of get into some tips and tricks? Nothing in the chat?
No, I think we're good.
Okay. All right. So step one, believe it or not, it's going to be get your audited financial statements from last year, read them and understand them. If there's disclosures or numbers that you don't understand and you're trying to prepare for this audit, now is the time to ask, where did you get this information? What does this mean? How can I help prepare that number this year? Or how can I help prepare that disclosure this year? It's definitely okay to rely on your auditor to prepare your footnotes to your financial statements, but you should understand everything that's in there. And if there's numbers, how did they arrive at that number? Okay, so you should be able to understand everything in those notes. So that's definitely step one. Step two, I suggest having a conversation with your auditor. Ask what went well, what didn't go well during last year. What can we be doing different collectively to meet our end goal? Just having that open dialogue could potentially just get things rolling on the same page so everyone can move forward cohesively. All right. Your third step, and I just had a question pop in and out. I'll answer that question right after I go over the third step. Check to see if your prior year audit statements roll into this year's accounting records. So that's a little technical. What do I mean by that? So your net assets, your equity, right, should equal prior year's number plus whatever your net income was, your changes in net assets. So let me show you an example. Okay, here's the bottom portion of a balance sheet or a statement of financial position, right? So you have your assets up here that I didn't show, you have your liabilities, and then you have your net assets. This example happens to be a very straightforward, easy example, because we only have net assets without donor restrictions. All right. So in 2021, this happens to be a June year end. In 2021, my net assets were $1,464,940. When I look at my numbers for 2022, my account balance, it's backwards here. Here's my report, June 30, 2022. This is my trial balance. I have two accounts, net assets without donor restrictions and retained earnings, that equal my 2021 ending year balance for net assets. What happens is this particular client is QuickBooks. So they have their set number, but when they close their books, sometimes it's going to this net asset account and sometimes it's going to retained earnings. Unfortunately, most accounting systems tell you that they are nonprofit compliant and they can keep nonprofit books, but very few of them can actually close your income statement into the proper net asset accounts. Like, it's just, if I could go back 20 years and redo my college education, I would do IT and auditing so I could create this perfect nonprofit accounting system that does not exist. But if you have found a good one, please definitely share it with the group, because it is a very common question I get of what accounting system do we use, because it's not working for us. We're always looking for workarounds, and it's very true. Most nonprofits are. But for net assets, so 2021 agrees to my 2022 balance. It's off by $1. 2020, $1,269,184 agrees to my 2021 balance. So that's what you're looking for in your numbers. Okay, so what is the net asset number on your prior year financial statement, and what is it for this year's net asset accounts? Now, if you're an organization that has restricted donations, right, this becomes a little bit more complicated. If it becomes more complicated if you're recording those transactions to your net assets. Most correct approach is to record all revenue in revenue and not to touch your net asset account. But some accounting systems and organizations have not been set up that way. So you're putting your restricted assets directly into net assets, and then you're releasing them out of net assets. So if you're doing that, you just need to look at prior net assets plus additions to restriction gifts received, less current year releases to restrictions. Then your number should roll. If you're getting differences, most common differences is because your auditor booked journal entries last year and you didn't either receive them or you didn't post them to your accounting system. So compare prior year trial balance to the audit and make sure everything agrees. If something's off, that's why your net assets is not rolling. Okay, so let's go back to the question. So there's a question. You talk about an audit being late. What is the normal timing for an audit to be completed? So everyone has different deadlines, right? So the state single audit is due 6 months after year end, and federal is due 9 months after year end. Bank covenants are usually 120 days. Sometimes I'll see 180, sometimes I'll see 90, but that fluctuates. An audit being late could just simply be my board meeting is X date and the auditor's not meeting, they're not ready for that date. I like to tell my clients that audits from start to finish that are completely clean, right? So I have communicated to my client has prepared everything that I requested. They're ready when we go out on field work. Should be able to wrap up generally 6 weeks. We can do 4 weeks, but it's very tight. Because what happens is we do our planning, we do our testing, someone comes in and reviews our work, and we prepare the financial statements. But then those prepared financial statements have to go through a second partner review. And every firm does that second partner review a little bit differently, but it takes time. And just because that statement is ready on Monday doesn't mean the reviewer can review it on Monday, right? There may be a queue. So I give it 6 weeks for a perfect, efficient audit. If there's journal entries, if requests are kind of going back and forth because there's not clear communication, that gets dragged out a little bit. There's also instances when we're waiting for confirmation. Say we're waiting for a state revenue letter, or we're waiting for legal confirmation. Sometimes that can make things long, extend as well. So when I talk about being late, it's more set the expectation in the beginning of the audit. This is when I would like my final product. And then work backwards, set those target dates. So you know if you're on track as you go. So late is really, I guess, a theory word of what you expect. And then that expectation is not being met. I hope I answered your question, Pat. Okay, so you've understood your financial statements, you've had a conversation with your auditor, and now you know that your net assets roll, right? Net assets rolling mean the auditor can just jump right into testing because they know that their financial statements are going to balance. All right, so next, look at your statement of financial position. This is also known as your balance sheet. It's a listing of your assets, your liabilities, and your net assets. Okay. I suggest looking at this level versus your trial balance as a starting point, right? So let's take cash. Cash in this instance could have one account or it could have 5 accounts. But let's look at it in total first and see where are the areas you think the auditor is going to focus. Now, an auditor is going to come in and do their standard testing, but they are also supposed to throw in some unpredictable testing, right? So you can't be 100% prepared if they're doing their job correctly too, because if they're completely predictable, that's a very easy way to get around fraud, right? Because you know what they're asking, so you know where to hide it. But this discussion here is how to get yourselves mostly prepared so you're ready when they come in for their testing or when they make their initial request. All right, so looking at the assets, right? Investments in this particular example makes up just under half of your assets. So in the beginning, when I said in our opinion letter that we do risk assessments, naturally investments are going to be one of my higher risks just for the sheer fact that it makes up half of your balance sheet. Okay, so you want to make sure you're really prepared for investments. But at the same time, cash is typically a liquid asset that's easy to manipulate. In some instances, it's becoming less and less easy because of all of the automation, right? Grants are automatically depositing money into the account, or you're making ACH payments. So it's getting to be a little less, it's becoming more secure, but it's still a higher elevated risk. So how do you become prepared for these? Cash. This one should be simple because hopefully you're doing this at the end of every month. And if you're not doing this at the end of the month, I highly recommend that you start. You should be reconciling each bank account at the end of each month doing a reconciliation, and then a second party should be reviewing that reconciliation. Okay. The person doing the reconciliation should not be the person that has access to write checks and change the accounting system. It should be a person away from the system, so they can't make any manipulations and changes. Okay. And then a third person or a second person reviewing that. Have that bank reconciliation ready and available for your auditor at the last month of your year. So if you're June year end, have June ready. If you're December year end, have December ready. Also have the subsequent month available. It doesn't necessarily need to be reconciled, but if you're a June year end, have that July bank statement ready for them. They're going to use that to test the reconciliation. Your accounts receivable balance. They are going to be looking for your AR aging, meaning it lists everything that's outstanding that you need to be collected. They're going to be looking at the dates. When is the collection due, and is it past due? For those that are 60, 90 plus days out, be able to explain why you haven't collected those funds and that why you expect to still collect those funds. What the auditor is looking for is, do we need to set up a reserve for the likelihood of not collecting those funds? So just be prepared to be able to answer why certain amounts haven't been collected yet. Prepaid expenses, have a listing of what makes up this prepaid expense, $6,715. Now, in this instance, I'm probably not even going to look at that $6,715, except for the fact that it's the exact same amount as the year before. So I would expect that number to change. But even if it's small, I would suggest that you're prepared for the auditor to ask the question. GL detail, your general ledger detail, is not audit support when it comes to your balance sheet. It needs to be a listing of what makes up that year-end balance. So what I would expect to see is something like this. What is the type of prepaid? So for this instance, it's different insurances and a rent. So how did you get to this prepaid balance? Well, my total policy amount or my total rent amount is here. I expense X number of months for it. So the difference between the amount expensed and the policy is what's been prepaid. Okay, so just having this support will help your auditor to be able to then either select an invoice or deem that they're comfortable with just the schedule alone. Okay. Investments. Now, I said that this is probably the highest risk just because of sheer dollar, right? Ironically, it's also probably the most commonly area of assets that aren't necessarily prepared for the auditor that I've seen. We'll get the investment statement, but sometimes the activity has not been recorded. So if you're in that boat, that you have the investment statement, but you're not recording the activity throughout the year, I encourage you to talk to your auditor because it's not difficult. And I think that they could spend 15-30 minutes with you to show you how to reconcile that investment statement. Because if you're not doing it, they are, which if they are, you're probably either paying them to do it or it's making them slow down in the process. And that 6 weeks is becoming 8 weeks, or that 6 weeks is becoming 9 weeks because they're doing some of the reconciliation work. Okay. And they can teach you how to do it. It's not challenging. I promise that. If they walk you through where to find the numbers on your investment statement, it's very doable. Okay. So the schedule that they're going to be looking for is, how do I roll forward from prior year market value to current year market value? So in this instance, the 988, how did it become 1,186,000? So it's the reinvested dividend income. It's the reinvested realized gains and also realized gains. It's also any new contributions that you put into the investment fund or any withdrawals that you pulled out. Okay, so putting that schedule together. I did not provide an example of this schedule because I'll be honest, every client that I work with has it a little bit different. And it's tailored based on the investment provider that you're working with, because their investment looks a little bit different. So I didn't provide an example. I suggest that you reach out to your auditor and request them for their work paper, because using what they have put together will be easier. Okay. Property and equipment. In this instance, I would say, it's 256,000. It's an elevated dollar amount, but it's not a big change from last year. So they probably purchased some minor equipment, some minor furniture, something small. So it's a relatively low risk. But again, the more you're prepared for, even if the auditor doesn't look at it, it's accurate and you're prepared to answering the questions that they have. Okay. So to prepare for this, keep your listing of fixed assets. If you don't have that listing and it's maintained by your auditor, again, reach out to them. You're better off in the end to maintain this information yourself. Even if you're a small shop and you only have limited resources, once you get the list, it doesn't take time to keep it, right? You're just saved on your network where you can maintain it. What your auditors will be looking for is that list and a roll forward. So what do I mean by that? Here's an example where you have your beginning balances, okay? And you have your additions and your disposals and the ending balances. So these ending balances should agree to your fixed asset listing. So they have 215,000 of building, 27,000 building improvements. So I should see individual lines in your fixed asset listing that totals up to those. So in this instance, they had $30,000 of network improvements, but my net number didn't change much because they also had depreciation of 22,000. When you have additions, be prepared to give the invoice support to your auditor for them to support the existence that the addition occurred. Some will ask for payment support, others won't. It depends on the risk that they're comfortable with. For disposals, if it's a net disposal, so they disposed of 24,000 of network equipment, which kind of makes sense when you have a new addition. Sometimes you get rid of something to add something, right? If it's fully depreciated and you didn't sell it, there's no support that you're going to have to give them. If you dispose of a vehicle and you sold the vehicle, they will most likely ask you for support on that sale, right? So if you sold it for $2,000, they're going to ask for some kind of support, either cash receipt if it was, off the street, or if it went to a dealership, they would ask you for the formal write-up. So whatever support you have, that's what they're going to be asking for. Any questions on the assets? If I'm going too slow or too fast, please just let me know. Oh, it's already 11:40. Okay, so I do need to speed up a little bit. Liabilities. So this is the bottom half of your statement of financial position, or the bottom half of your balance sheet. The risk of your liabilities is understatement. So the auditors are going to be making sure that you've completely listed all liabilities on your balance sheet or statement of financial position. So when they're looking at grant payables and accounts payables, they're probably going to test subsequent activity. They're going to obtain your listing of accounts payable. And they're going to make sure it's reasonable. They're going to look for related parties. They're going to look for negative balances. But really what the crux of their test is going to be is what's called a cutoff test. So they're going to ask you for your subsequent payments. So if you're a junior end, they're going to ask you for your payments in July or maybe even August. They're going to request those of the highest dollar amounts. And I can't tell you what the magic number is, right? Because every auditor is going to set their materiality differently. So there's no magic number I can tell you, but have the top 10 ready to go. Have the top 15 ready to go. Even do that while you're doing your July bills. I know it's late now, it's September, but if you're December year end, while you're paying your January invoices, keep those high dollar ones out because the auditor is going to be asking for them. And again, every audit might be a little bit different. So if they don't ask for it, it's not necessarily that they're doing a bad job or not doing a complete job. It just means their risks are different. Feel free to ask them, oh, I had this ready. Why aren't you requesting this? You can always ask, but it's not necessarily that they're doing it wrong. Okay, so my goal in this is to get you to be prepared as possible for what they may be asking for. All right. Payables. So grant payables, again, we'll do a subsequent test looking at payments, but that one we will more likely rely on the listing of what is due and test that listing. Okay, accrued expenses here is 61,000. It did double from last year, or almost double. So when you're looking at your big picture, not individual accounts, kind of notice what fluctuates, what changes happened from this year to last year. You probably have to give your board that information too. What changed? Your auditors are going to be in the same position. What changed? Why did it change? So being able to talk fluently about those, other than, I don't know, we expensed more, but I didn't make payment. Like, I do see that in my work paper sometimes, but it'd be nice to get a little bit more. What did you buy at the end of the year? Why did it elevate from last year? So just giving a little bit more detail. And if you have time to think about those details, it'll be better communicated as well. So accrued expenses. In this case, it increased because they had more days accrued for payroll. There is, I'm going to throw it out there because I don't remember the exact, like this year they accrued for 5 days, where last year they accrued for 2 days. But what the auditor is going to look for is the payroll journal for the last pay period of the year that was paid subsequently. So if you're a June year end, the last payroll in June that was paid in July, that's what should be accrued. Okay, and that's what they'll test. For mortgage payables and notes payable, it's going to be similar to like the fixed assets. They're just going to want to roll forward. Here's my beginning balances. Here's a new debt I took on this year. Here's my payments, and it agrees to ending balances. Some auditors will want to confirm the mortgage balances or notes payable balances with the bank or whoever the note holder is. Others may pass on it. If your auditor is using confirmation.com, they're getting charged to do that program, and either they're passing it on to you, or they're increasing their fee, or maybe they're even eating it. I'm not sure. But if they're using confirmation.com and you have online access, ask them if you can just do a screen share, watch you log into the account, and then you can demonstrate the balance as of the end of the year. It'll save timing on the confirmation. It'll save the fees on the confirmation. And it achieves the same aspect. That's just a suggestion. All auditors might not go for that, but it's worth the ask. Okay, so that is your balance sheet. Any questions on liabilities or assets or anything that I've talked about so far? Or anything that you found that you've been prepared, or questions that have come up that kind of surprised you? Quiet group. Okay. All right, so we'll move forward to the statement of activities. This is also the income statement. Okay, it shows you your revenue and your expenditures. This section, the income statement, is typically when the general ledger is useful for the auditor. Again, the general ledger detail is typically not useful on the balance sheet because that has all the activity as of the year, but not necessarily what's in the account at the end of the year. Remember, your balance sheet is a point in time where your income statement is activity for the full year. So this is when the general ledger does actually help the auditor. The auditor will most likely make a sample of each type of revenue. So this particular example is grant revenue, membership, other revenues, and investment gains. All investment activity is typically tested the same time as they're testing the investment balance. So you won't have to worry about that. Government grants, any grants, they may confirm with your grantors, or if it's a state or federal, they'll probably definitely confirm with them. So that'll take care of that, but they could also test a sample where they're going to ask for your grant documentations, your contribution documentation. They also may do things when you test revenue, you have to test it substantively. That would be a sample, right? Or you could also do what's called substantive analytics, where it's not just looking at, so membership fees decreased to 20,000. My math is bad. So it decreased. It decreased because I lost 10 members. That's not a predictive analytic. Predictive analytic is if I take the 205,000 and I divide it by how many members you had last year, and I get that rate, times that rate by how many members you have this year, and it should come close to the 185. So be prepared to be able to say how many members you have. You could do that for fundraising events too, like be able to say how many people attended my golf tournament, how many people attended my gala, those sort of things. Pat, I see your question and I will answer that after I go over expenses. That's a good question. Expenses. Again, this is another useful section for general ledger. It's also a difficult section for me to help you be prepared. Every firm that I've seen and reviewed work papers for will test expenses a little bit differently. Some go very detailed, others do very lightly. So here it would be the best preparation would be for you to understand what your expenses are and what changed from last year. So if you had health insurance increases, know what that increase was. If you had several repairs that weren't deemed to be capitalizable, but they were, sizable, then know the details of those repairs. Understand what the fluctuations were in your expenses, and that'll help you prepare for the auditor's questions. Okay. Actually, I'm going to do this last one. So last step, in reviewing the prior year financial statements, remember you read them and you understood them. And if you didn't understand, you asked the questions of what you didn't understand. In that, understand if there's any footnote disclosures that you can prepare in advance, such as, are there changes to your programs that you want to update your financial statements for? Any renewals of line of credits or termination dates of line of credits that potentially need to change. Another disclosure that doesn't come up in the audit testing very often is the retirement benefits paid. That is a required disclosure. So if you have retirement benefits, know what that expense was, because that will need to be in the disclosure as well. So I think that's everything that I can say to be prepared for. It's pretty high level, but it's pretty standard. So when you get that initial request letter, most of the things I just talked about are going to be on there. So you can prepare all of those things as soon as you're finalizing your numbers. Almost think about it as you're doing it instead of an aftermath when you get that request letter 3 months after your year end, when you're long forgotten some of those details. Okay. A question came in. We will have changed our accounting platform this year. Is there anything that we should can't read? Is there anything that we should be especially prepared for? So when you change your accounting softwares, if you changed your account numbers, which most of the times you do because you think of it as a chance to improve, right? There's always things in your current system that you wish you could change. So you've all probably updated and changed your chart of accounts or your structure of your accounts. Definitely let your auditor know that you've done that in advance, because we use software that we input your trial balance and we group all of your accounts to then create the financial statement where it's linked. So automatically when I roll it next year, those links just update with the new numbers. But if you have new trial balances, I need to go through the process of regrouping that within my system. I can do that in the middle of your year. I don't need final numbers to do that, right? So often downtimes in CPA firms is that May, June timeframe, December-ish, sometimes January. Those are downtimes. Most of the time, not always. But when you do your new trial balance, get that to them in advance so they can set it up and just be prepared that much earlier. Okay. Other things, if you're changing in the middle of your year, so you're going to have a part of your GL in one system and the other part of your general ledger in another system, definitely let your auditor know about that as well, because they that's a little bit more work. It's a little bit more cumbersome, so they're going to want to know that in advance so they can prepare for the additional timing that it's going to need to do that. Okay. One more question came in. We may be late for submitting our 5500s due to financial statements not being ready available yet. Do you know if there's any repercussion to our institution? I'm not, benefit plans is not my specialty, but I believe I'm going to get back to the group because I think I'm going to have your emails to send out this information to you, but I'll get back to you. But my initial answer, and I will let you know if I'm need to elaborate more, is you should still submit your 5500 without the financials attached, so at least you get the submission in, and then you can amend and resubmit with the financial statements as soon as you get them. As far as penalties and fees, I will have to ask. I am not sure what those are. All right, so I'll get back to you on that one. Okay. Thank you for your questions. Okay, so the last bit, and I'll go over this in just a couple minutes so we can have some open discussion and questions if you would like. So just details that should be discussed. Remember, the more open you are with your auditor, the better it's going to be for you, and same for them. So be proactive, be prepared as you possibly can. Ask questions like, are there any testing areas that can be done in advance, right? So if you're a June year end, I know we're talking about September, but for next year, right? Is there things that can be done in April or May to prepare so you don't have to do it all during your scheduled field work? Ask questions of what date will you be sending me selections and what dates are you scheduled to review the full documentation? Okay. Not giving excuses for us auditors, but sometimes we forget to give you those details. So ask. You shouldn't have to ask us, but you know, let's just keep us all on the same page. And if you haven't been communicated to, ask. And you're going to get a more proactive response and a more proactive audit. Auditors, like most people, are driven by due dates. So give them a due date and prioritize give them a due date and then work backwards and schedule your timing. Okay. You know, set targets so you know that you're on track. What else? Discuss in advance when you need the drafted financial statements for board meeting or compliance due date. Okay, so we're just due date driven. I'm sure there's many industries like that, but I have my list of clients I need to get done and they're in order by due date. Even if I started one a little bit sooner than the other, I just know I need to get it done sooner. So it's just probably a standard on how we work. There also are standard questions that auditors should be asking management, employees, and governance. So we should be asking about fraud, if it occurred, if you're aware of it. We should be asking if there's any legal issues, and having that dialogue and communication with your either your audit chair, your finance chair, or your board chair. One of those people, those are your governance. So be prepared to give that communication to your auditor. And if they're not communicating that to you, always feel free to ask. Okay. That is, oh, okay. So just communication, just before, during, after, just talk to them, and they're going to be more proactive with you as well. The last bit of information, I do hear from time to time from clients, I make a request, I already gave you that. So if you have said those words, I've already given you that, there's a communication gap. Either we're asking for the information in a way you're not understanding and you're giving us something that doesn't help us satisfy the test. Or sometimes, you know, the share files or the Citrix or whatever database they're using to collect information gets very unorganized. Come up with a plan on how to organize documents that you're giving your auditor. If their request list is numbered, follow the numbers on when you're uploading it. If it's by topic, make folders by those topics and put things in those folders. So just organizing. So if you find yourself saying, I already provided that, hopefully both of you recognize that there's a communication gap and kind of fill that gap in and figure out why, what's not working. Okay. It looks like there's one more question that came in. Oops, I just closed it. We are changing platforms. We are converting from QuickBooks Desktop to QuickBooks Online. Have you seen drastic differences or things we should be aware of with this type of change as it pertains to reporting? QuickBooks Desktop, I'm personally more familiar with desktop, but more and more my clients are going to the online database because it's easier to get support. It's easier to review it outside of the office. There are some reporting limitations, but those are slowly going away. Elke, you're the one that asked this question. I can have another conversation with you where I can bring in our accounting service team that works with QuickBooks Online, and they can specifically, actually, I'll ask them for some bullet points on what the dramatic differences are, and I can share that with everybody. We are at our end of our time, right at 11:59. Are there any other questions or anything that you think might be beneficial for someone else to hear that you'd be willing to share? Okay, my Great. Quiet group.
Well, thanks, Amber. And we'll be sending out the slide deck to all along with the recording, for I know some of you actually joined late. And obviously, if you have any questions, you can certainly reach out to Amber directly. Her contact information is here. Well, it's not here on the screen, but it is actually on our partner page. So you can go to the FML partner description, and you'll see all her information there. As I mentioned earlier, our partners truly care about the nonprofit sector. So if you're in need of any of their businesses, reach out to them directly and let them know that you're a TANGO member. And in closing, we have many more educational webinars coming up, which you can see on our events page. And if the topic is not in your wheelhouse, feel free to send it along to any of your coworkers. There's so many different topics that we cover, whether it's HR, benefits, accounting, finance, marketing, it's all there. And we actually have 5 or 6 webinars coming up in the next month and a half. And lastly, make sure that you and your staff sign up for our Building Bridges conference, which is coming up in November. So thanks again to everybody. Enjoy the rest of your day. And Amber will be doing a follow-up with everybody probably tomorrow or Monday. So have a great weekend. Thanks all.
Thank you all.
Take care.